Well, the Muqabla has happened. Of course, now we are waiting for the result. And in about a minute from now, the counting should start. In fact, it started now. So very soon you will have the first leads. And of course, let's see where things move. But for now, we have Kathleen Gingold, Managing Director of Kartika, and Mark Matthews of Bank Julius Baer now joining in. Good morning to both of you. Kathleen, your thoughts on the importance of these state elections, because the exit polls are predicting bad outcome for the ruling BJP. If the actual outcome is also on those lines, do you think the market would take it too negatively?
Well, the short-term impact clearly could be very negative or heightened volatility. But from our perspective, I don't see really that much difference in the political parties' approach to the economy. So whoever comes out in next year's elections, I don't think that will overwhelm the positive underlying macro fundamentals that we see in India. So short term, yes, but medium, long term, we don't see any change. We don't need to make any changes to our views to India based on this.
Okay. Please stay on with us, Kathleen. We also have Mark Matthew of Julius Baer with us. Good morning, Mark. Thank you very much for joining us. The other big event to hit economy and financial sector is the resignation of the governor. What's your reaction to it? Would you be worried about not wanting to immediately put in money, want to wait and see how things pan out? Or would you even advise pulling out money for the moment?
I don't like it. I don't like it because it shows there's clearly friction between the government and the central bank. And of course, we'd had an inclination about this for some time. Apparently, he wanted to resign back in October. But just coming, less than 2 years after another RBI governor resigning, I think it shows there's something not right. And so we're underweight India, excuse me. And if anything, it just provides me some sense that that's the right thing to do.
Okay, that's a fair point. Kathleen, good morning. Do you see an exodus of foreign investor money because of the RBI governor's resignation? And does the risk premium on India go up now?
I don't think so. I mean, clearly, as the speaker before mentioned, it's something that could concern people in the near term. What makes us confident is that the MPC framework is in place and that ensures the continuity of monetary policy. And then again, I think I would just emphasize that what matters for foreign investors and equity investors, it's that we do is earnings, and India is in a earnings recovery cycle, and that earnings recovery is not over by any measure. In fact, if you look towards next year, India could deliver quite interesting earnings growth, and earnings growth in excess of most Asian markets and one of the highest in emerging markets. So I don't think that this political issues or the RBI issue is enough to pause investors or make them pull out money from India at this point.
Sure. Mark, good morning. In fact, that was my next question to you as well. You said that perhaps you will be a bit underweight on India. What could change that stance? Because like we saw last time as well, at the time of Raghuram Rajan's exit, for example, that was perhaps the best buying opportunity. So, what would make you change your stance?
It would probably be a larger call on the emerging markets where we are currently neutral. And it does seem the emerging markets appear to be putting in a bottom and even starting to outperform developed. But we still think that there are several more rate hikes ahead of us in the United States. And therefore, I kind of struggle to really get warm to the emerging markets right now. But I think it would be in the context of warming to the emerging markets because the fund flows, I think these days, foreign fund flows, so many of them come through ETFs. And so if you see foreigners warming to this emerging asset class, automatically India will be bought. But on the ground, I don't really know. The sentiment, in my opinion, seems quite divided between people who like the idea of a coalition government and people who don't. So net, I think the Indians are kind of neutral, and then the foreigners, I think, are still kind of not ready to jump back in the emerging markets just yet.
Okay. Well, Kathleen, the issue of the Reserve Bank governor's resignation, as you correctly pointed out, is not like Turkey, where the governor got dictated to on rate issues. Here, that question doesn't arise because it's an independent MPC. But the difference of opinion is on plumbing and sanitation of the financial sector. Putting more capital on weak banks, not allowing weak banks to lend to risky borrowers, not extending a line of credit to NBFCs which are in trouble simply because there could be asset quality issues. These were the issues that differentiated the government stance and the Reserve Bank stance. So what would you watch out for in terms of future investments, both from the Reserve Bank person and actions?
Yeah, I mean, first of all, what makes us confident is we don't see a system-wide financial risk in India. It's not an economy, like you mentioned, Turkey, that clearly had a leverage problem, that clearly have an external vulnerability problem. India has been deleveraging for the past 10 years, really the only emerging market that's been going through that. The bad loan problem is a well-known problem. I don't think that the government will need to really push a lot in terms of lending. I mean, as I mentioned, we're quite excited about the recovery in the economy, and that's really driven by the renewed credit cycle. We are mid double-digit credit growth, really back to the pre-2014 levels. I mean, that's a number that should drive sort of the next leg up in the growth momentum in the capex cycle. The MPC already turned dovish last week. I don't see that, inflation is not an issue. I don't really see that they need to put much more pressure on the gas at this point. But clearly, if there is more pressure from the government directly interfering in the banking system, that would be a concern for fundamentals as well, longer term.
I take your point, Caitlin, about the Indian economy recovery, but could it become a sideshow as the global growth scare continues? And could that lead to a move away from risk assets in 2019, causing a fall in global equities?
Yes, you're very right. It could. I mean, it's really the story of this year as well. If you look at emerging markets, the fundamentals are quite positive. Growth is there. The balance sheets, with a few exceptions, like Argentina, like Turkey, are quite healthy. Some countries, like India, is early in the cycle, but yet money been moving away from emerging markets. The global sentiment is risk-off, and that could continue into next year. That is very difficult for us to, or for anybody for that matter, to predict sentiment. I would say maybe one thing that the dollar, as the speaker mentioned before, is very important. But as the U.S. economy is, reverting back more to potential and is slowing, and there is some apparent risks in the system, we think that the Fed is probably very close to the end of its tightening cycle, which could then mean a softening dollar next year. Again, very difficult to call the timing, but the trade-weighted dollar is back to the level where it was back in 2016 when the last cycle of a weaker dollar has started.
So clearly,
that could be support for the market, emerging markets and risk markets next year.
Sure. So Kathleen, in that case, what should be the portfolio approach? This year, the focus has been about defensives, about exporters. Indian IT stocks have been the best performing stocks. Do you think it's now time to go, perhaps take some money out of exporters and get into domestic cyclicals?
I think so. If you have a medium, longer-term view on a fundamental basis, I think that's the right move. Again, you're playing an economic recovery, you're playing a credit cycle, you're playing a potential capex cycle starting. I think that's time for the cyclicals. Again, the timing is tough to call, and I cannot predict sentiment, but from a fundamental basis, that's the right portfolio approach.
Okay, Mark, you of course obviously have opposing views in terms of the Fed's rate cycle, and you generally now prefer developed markets or the US markets to emerging markets. But with respect to India itself, what will be the outcomes or issues that will attract you back, and what will keep you away?
I think what would attract me back is definitely if there was a peak and then a fall in the dollar. That the whole emerging asset class would look much better in that circumstance. And there are some preliminary signs of softness in the U.S. economy, but our view now is still for quite a few more rate hikes between now and December next year. So I can't say that's something I expect as a catalyst. But then I suppose more clarity on the non-bank financial corporations. That disturbs me, the amount of credit that they lent over the last, let's see, when did the recap start of the banks? December 2015. So much of the credit that has come out since then has been from the non-banks, and I still feel that I don't have the transparency that makes me comfortable, and that sector's in the clear. And then earnings growth. Yes, I do think that ultimately what moves share prices is earnings. So if earnings growth is good next year, that'll be very supportive for India. But the beginning of this year, we were looking for earnings growth about 20%, and of course it didn't turn out to be that high. So I'd like to see the revisions start to pick up on the earnings side.
Okay, so we have two completely opposing views, but I guess that's what makes the market, right? Mark, one final question to you before we wrap up this discussion. You started the conversation by saying you're underweight on India. What does that mean? After the events of the last 24 hours, would you look to take money out of India, or would you just stay away for a bit?
No, nothing has changed in the sense that I think a lot of people did expect Rajasthan would go over to Congress, and that the other states would be very close calls, and a lot of people knew that there was friction between the RBI and the government. So nothing's really changed, but I would say it's more a vindication of those opinions.
Okay. All right, Mark Mathew and Kathleen Gingold, thank you very much for joining us and giving us your worldview as well as the view of the world of India. We have to take a quick break. On that note, we are coming back and looking at some specific stocks that are in the news. Of course, it's going to be a macro move, but nevertheless, some stocks in news, and thereafter, our technical experts will also join us.